From oil shock to debt stress, there is no true independence. Flint West reporting. You see, the game was never about independence. It was about timing. America says it is energy independent. Politicians say it. Headlines repeat it. It sounds clean. It sounds sovereign. It sounds like stepping outside the system. But the system does not have an outside. It is a closed loop. And the moment the Strait of Hormuz tightens, 20% of global oil supply moving through a single artery, you begin to see something uncomfortable. You do not need to import the oil to import the price, because oil is not local. It is global, and global means coupled. Let us walk the chain. An oil shock hits. Tankers stall. Insurance premiums spike. Supply drops. Prices rise. Refiners pay more. Consumers pay more. Inflation returns just when it was thought to be fading. That is the first phase. The second phase is growth. Higher energy costs act as a tax on everything: transport, manufacturing, food, logistics. So global growth slows, not just in Europe, not just in Asia, everywhere, because energy is not a sector, it is the base layer. This is where most people stop. They see slowdown, they see recession risk, and they think they understand the story. But the deeper layer sits beneath that. Debt sustainability, a quiet equation sitting behind every government balance sheet. If growth slows and interest rates remain elevated, the math turns. Debt does not explode overnight. It tightens, slowly, relentlessly, like a noose. Now zoom out. Who holds the debt? Foreign nations, not the majority, but enough. Japan, China, Europe, oil exporters, holding United States treasuries as reserves. Why? Because the dollar sits at the center of the system. But here's the catch. Those reserves are not permanent. They are conditional. Now replay the shock. Oil disruption hits. Global growth slows. Importers suffer. Fiscal stress rises. Liquidity is needed. And suddenly, those safe reserves become sellable assets. That is the turn. That is the reflexive shift. The system begins to turn back on itself, because the same mechanism that financed stability can reverse under pressure. This content is brought to you by Bobby Giggs. Promote your brand here and reach a wide audience across platforms like YouTube, Instagram, and Facebook. Follow the links in the description to get started. If foreign holders begin to sell, the pressure shows up quickly. Demand for treasuries weakens, yields rise, borrowing becomes more expensive, deficits expand, growth slows further. And just like that, the center begins to feel what the edges already felt. This is not collapse. This is exposure, delayed exposure. Now layer in the real dependencies, because energy is only the beginning. Semiconductors. The United States designs the chips, but fabrication exists elsewhere. Taiwan, South Korea, Japan. Remove that capability, and the entire build-out slows, not because of capital, because of capability. Then software. India. Large portions of development, maintenance, and systems architecture flow into United States firms. This can be replaced, but not instantly, not at scale, not without cost. Then materials. Rare earths. Africa, China, Eastern Europe, South America. Without these inputs, modern systems do not function. Electric vehicles, defense systems, data centers, energy infrastructure, all depend on them. So what is this really? Independence or structured dependence? Globalization was never just about efficiency. It was about specialization. And specialization creates dependency. Now, bring Iran back into the frame. Because this is where asymmetry shows up. Iran does not need to match United States military power. It only needs to disrupt a choke point. The Strait of Hormuz is not valuable because of strength. It is valuable because of the world's dependence on it. That is leverage, low cost, high impact. And here's the twist. That disruption does not just hurt oil importers. It hurts the system itself, including the United States. Because again, you do not need to import the oil to import the consequences. Now consider the political layer. Greenland. When the United States floated aggressive posturing, Europe did not respond with tanks. They hinted at something else. Financial retaliation. Selling United States assets, treasuries, stocks. Not executed at scale, but the message was clear. We are in your system too. That is the moment the illusion cracks. Power is not just military, it is mutual exposure. So, what can be said? There is no clean exit from a globally coupled system, only gradients of vulnerability. Some feel it first, others feel it later, but everyone feels it. The United States has advantages: domestic energy production, deep capital markets, reserve currency status. These are buffers, not shields, because the real system is not built on independence. It is built on flows: energy flows, capital flows, knowledge flows, material flows. Disrupt one, and the others start to move. That is the framework, that is the map. So when someone says energy independence, there's no need to argue. Only one question matters: independent from what? Because in this system, there is no outside, only delay. And when the shock finally arrives, it does not knock, it propagates. Flint West signing off.